Did you know that the Bay Area led Western markets in terms of sales, with an office investment volume of $727 million during the first quarter of this year? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoan. Let's get right to it. In a significant move within the commercial real estate landscape, NVIDIA has expanded its presence in Silicon Valley by acquiring the Clara Commerce Park for $123 million. This 251,000 square foot flex office campus is strategically located adjacent to NVIDIA's headquarters, as reported by the registry. Blackstone's Link Logistics was the previous owner of this property, according to Commercial Edge. The Clara Commerce Park is part of a larger portfolio subject to a $2.7 billion commercial mortgage-backed securities loan, which encumbers 138 properties. Citibank originated this note back in 2022, and since then, 28 properties have been released, leading to principal paydowns totaling $552 million as of July 2024. The note is set to mature this August. Located at 2300 to 2398 Walsh Avenue, the campus is roughly 7 miles from San Jose's central business district. Major thoroughfares such as US, Route 101, and Interstate 280 run within 4 miles, and the San Jose Mineta International Airport is less than 6 miles east, making it a highly accessible location. Comprised of 10 buildings, the property debuted between 1959 and 1973, offering office, research, and development, as well as warehouse space. It also features amenities like an on-site deli and gym, which are attractive to potential tenants and users. NVIDIA's expansion is part of its broader strategy to increase its artificial intelligence capabilities. Just last month, they announced plans to manufacture artificial intelligence supercomputers entirely in the United States. With several partnerships, NVIDIA aims to produce $500 billion of artificial intelligence infrastructure across the nation within the next 4 years. Earlier this year, NVIDIA also purchased a 500,000 square foot campus from the Sobrato organization, which it had occupied since 2010. This property is also in close proximity to its headquarters, further consolidating its presence in the area. Last year, they acquired a 550,000 square foot asset from Praylock Holdings for $374 million. The Bay Area continues to attract significant office investments, maintaining momentum into April. For instance, LinkedIn acquired a 120,000 square foot research and development asset in Sunnyvale, California for $75 million, previously owned by Synopsys. This demonstrates the ongoing appeal of Silicon Valley as a hub for innovation and investment. Private wealth investors have become a formidable source in global commercial real estate in the past decade, according to data and analysis published by JLL. Between 2013 and 2024, JLL tracked over $1.5 trillion in private wealth investments, which include high net worth individuals, family offices, family-owned businesses, and selected private developers and property companies deployed into global commercial real estate via direct deals. We're witnessing an increasingly diverse investor base looking to deploy capital into commercial real estate, with private wealth one of the fastest-growing segments, says Richard Bloxham, Chief Executive Officer, Capital Markets, JLL. This class of investor is becoming one of the most active and influential participants in real estate, complementing the strengths of traditional institutional powerhouses. In the coming years, JLL expects private wealth participation to continue to increase via direct investment in property and operators, indirect investment in private real estate funds, as well as taking other positions in the capital stack. The Americas has been the primary beneficiary of growing private wealth investment into commercial real estate, attracting $643 billion in capital between 2013 and 2024. During the same period, JLL analysis concludes that the Europe, Middle East, and Africa (EMEA) region received private wealth investments of $566 billion, while the Asia-Pacific (APAC) region saw direct deals worth $318 billion. The substantial inflow of private wealth into EMEA's commercial real estate sector underscores the region's enduring appeal and robust market fundamentals, comments Joseph von Maltzahn, JLL Head of Private Wealth for Capital Markets, EMEA. The United States proved to be the most popular investment destination over the decade, drawing 40% of all private wealth investment volumes in commercial real estate, ahead of the United Kingdom, Germany, Australia, and Hong Kong. Japan, France, the Netherlands, Canada, and Sweden rounded out the top 10 recipients between 2013 and 2024. According to JLL proprietary data and analysis, office has emerged as the preferred investment preference of private wealth investors, attracting $464 billion in capital over the past decade. Living assets have also demonstrated substantial appeal, drawing $359 billion in capital. During this period, private wealth investors were also active in retail, industrial and logistics, and hotels. Sophistication in the private wealth space globally is evolving quickly. From New York's skyline to Spanish wind farms and solar plants, family fortunes are leaving their mark, but they are also increasingly demonstrating a high degree of strategic acumen behind capital deployments into commercial real estate, says Pamela Ambler, Head of Investor Intelligence, Asia Pacific, JLL. The Couture apartment high-rise in downtown Milwaukee is enhancing its appeal by adding $3 million worth of amenities just a year after opening. Developed by Barrett Low Visionary Development, LLC, this high-rise has already leased 50% of its 322 units, including 16 of its 18 penthouses. The building is also leasing its commercial spaces, attracting tenants from outside Wisconsin, as reported by the Milwaukee Journal-Sentinel. Richard Barrett, the owner of Barrett Low Visionary Development, LLC, explained that the investment in new amenities is a way to reward the residents of what he considers the best building in the city. The improvements include renovations on the second floor, adding a game room, fitness room, children's playroom, and lounge, utilizing 6,503 square feet initially set aside for commercial tenants. The amenities are set to include 2 golf simulators and a yoga room. Additional enhancements include a 308-square-foot dog wash station on the 3rd floor and 1,582 square feet of co-working spaces on the 4th floor, which will replace the current fitness room. The fitness room itself is being relocated to the 2nd floor, where it will be approximately 1,000 square feet larger. Furthermore, a new bar area is being added to the 4th floor clubroom. The decision to invest in these amenities comes as a result of the successful lease-up of both residential and commercial spaces. 2 commercial leases have been signed for the 2nd floor, covering 8,000 and 2,200 square feet. Barrett Low has also secured letters of intent for leasing the remaining commercial spaces, which include 15,000 square feet on the 3rd floor and 11,000 square feet on the 1st floor. While the details of future tenants remain undisclosed, Barrett mentioned that some tenants will be relocating from outside Wisconsin. The commercial tenants are expected to open by mid-2026. The businesses are drawn to the Couture's unique elliptical design and prime downtown lakefront location. According to What Now, the Heartland company is making significant strides in the realm of payroll solutions, particularly benefiting entrepreneurs who require streamlined, human-centered technology. Heartland services are designed to alleviate the time spent on back-office operations, allowing business owners to focus on growth and development. With nearly 1 million businesses placing their trust in Heartland, this payroll solution is helping them navigate market changes and technological challenges effectively. Heartland Payroll is known for its transparent pricing and flexible plans, making it a preferred choice for managing workforce-related tasks both now and in the future. Heartland's Payroll Plus software suite offers a comprehensive solution that simplifies payroll, onboarding, taxes, hiring, and more. Business owners can offload time-consuming tasks onto this powerful platform, facilitating better business decisions through real-time data. This includes hiring the best applicants, automating employee onboarding, and creating smarter schedules. Furthermore, Heartland helps business owners avoid hefty compliance fees by providing a free library of resources and expert human resources advice, ensuring that employment and labor law requirements are met with confidence. This support system is bolstered by a team of payroll professionals who are readily available to assist whenever needed. The integration of these services into businesses underscores a broader trend where real-time data and automation are becoming crucial components in managing commercial operations efficiently. As such, Heartland's approach is not only reshaping how businesses handle payroll, but also how they adapt to the evolving commercial real estate landscape. In Belleair Bluffs, a new boutique hotel could soon become a reality. A local business person has submitted a request to amend the Belleair Bluffs Land Code to permit hotel and motel accommodations in the city's commercial general district. This proposal was discussed during an April 14th City Commission work session, where 3 draft ordinances were presented for consideration. These ordinances, if approved, will allow temporary lodging in commercially zoned areas of the city. City Attorney Tom Trask explained that the ordinances stem from a text amendment submitted by the public, which allows such requests to be made. The applicant is seeking changes to the comprehensive plan, with the aim of eventually building a hotel in the city once all other standards and requirements are met. One proposed change would permit hotels and motels in the commercial general district, primarily located along the West Bay Drive corridor. Additional changes address density standards and parking requirements for such developments. According to the proposals, the development could not exceed 75 feet in height, provided all density bonus requirements set by the county and forward Pinellas are met. The plan also proposes a parking space ratio of 1/2 space per unit, meaning a 40-unit development would require 20 parking spaces. Additionally, the ordinances suggest modifications to the city's land development code, increasing the floor area ratio for transient accommodations from 45% to 55%, and the impermeable surface ratio from 45% to 90%, aligning with the city's comprehensive plan. The Commission agreed unanimously to move the drafts forward to a first reading on April 21st. However, not all initial votes to approve the ordinances were unanimous. Commissioner Karen Rafferty voiced concerns about reducing the impervious surface requirements from 45% to 90%. She argued that the reduction would lead to more hardscapes and less green space, which she believes is excessive. Additionally, Rafferty expressed reservations about the parking space ratio, labeling it as one of the lowest in the area. Consultant Luis Serna explained that the increase in impermeable surface ratio stems from a higher standard for temporary lodging. Still, Rafferty maintained her stance, stating that the ratio should be amended to 1 space per unit to match neighboring communities. Mayor Chris Arbatine agreed with Rafferty's concerns, noting the importance of the Planning Board's review of the proposals. He emphasized that a yes vote does not guarantee final approval, as the Planning Board's recommendations will be considered in the second and final reading. During public comment, resident Anna Hale inquired about the possibility of boats and recreational vehicles parking in the development's lot, which could be near the Belleair Causeway. Attorney Brian Aungst Jr., representing the applicant, clarified that the parking lot would be private and reserved for hotel use, thus not allowing recreational vehicle or boat parking. When it came to voting, 2 ordinances passed unanimously, while the one concerning the parking space ratio passed with a 4-to-1 vote, with Rafferty voting against it. The draft ordinances will now be reviewed by the Planning Board before returning to the Commission for a second and final reading, a process expected to take several weeks. Brian Aungst Jr. mentioned that his client, who wishes to remain anonymous until the ordinances receive final approval, is enthusiastic about potentially building a landmark boutique hotel in the area. The development would provide much-needed lodging for friends and family members who cannot stay with their loved ones due to local residential restrictions, offering quick access to the area's beautiful beaches. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Halmoon. See you on the next one.